Let me just get the window up that I want. Okay, here we go. So I'm hoping that you can actually see that with no problem. Can you see my screen?
Yep, no problems, Jo.
Okay, good. All right. And the reason that, obviously I was keen to be involved in this is because I think that, sorry, hang on, it's gone on further than it should have done. The reason I wanted to get involved in this is because I believe that there's a lot of, it's really challenging being a founder at this point where you're between startup and scale up. That is known as the valley of death. We all know it's called the valley of death. It is a horrible place to be as a founder. And I think that what Neil's trying to do and Craig are trying to do with Exponential Business Club is actually really important for that particular stage where, you know, we've got this far, we're at the point where we can potentially scale, and for any business in this space, you know, having investor support is really important, but there are a number of challenges for you as investors investing in this size of business just before they go into that big seed round, which obviously we'll talk about after my presentation. So I'll start off, obviously, you know, so my name is Jo Eckersley, you realise that. I'm the founder and CEO of Bubble. We help brands to supercharge their mobile marketing with our Bubble API, and essentially it plugs into any app. It's a bit like the APIs Stripe and Twilio, which you will have heard of. Stripe brings plug-in payment tools to an app, and Twilio brings plug-in internet telephony, and Bubble brings content, location, and notification tools together. So we're the equivalent of Stripe and Twilio, but for mobile marketing. And basically, where people used to say there's an app for that, now they say there's an API for that, because APIs are driving both the app industry and the mobile marketing industry. So before we get into the detail of our product, let's look at the world of apps that we operate in and the problems that there are there. There are now over 7.5 million apps, and the pandemic has sent new app builds, downloads, and usage into overdrive with no sign of decline at all. But despite their promise, the potential of apps is hindered by these challenges. The number one reason for uninstalls is poor user experience. 77% of users are lost within 3 days, and generally that's after fortunes have been spent on acquiring them. 66% of marketers can't even measure return on investment. And in 2019, brands lost 42 billion to in-app mobile ad fraud. It's overtaken credit card fraud, and it's getting worse. So we set about to disrupt this. You see, apps are now made up of multiple parts that plug together like a jigsaw, and Bubble is like one of the jigsaw pieces. We're like a supercharged notification system, a simple API that plugs into any app, turning it into a brand's new own channel for direct and responsive customer engagement. And as you can see from the awards and media coverage we get there at the bottom of the screen, you know, sort of the marketing and advertising industry has sat up and taken notice. At the moment, ad tech is like a dark art. There's lots of, you know, you'll hear about cookies now not being available anymore, and you know, all sorts of stuff that's causing it to be very complicated to understand, but it's also complicated for brands to engage with. But things started to change a couple of years ago, based on geofencing technology like this, where you can see we've set up a virtual boundary around the O2 in that picture there. So Burger King spent 2 years hard coding their app for a 9-day campaign. It was called the Whopper Detour. And they drew virtual geofences, which are digital boundaries, around 20,000 McDonald's car parks. They got far less than that. When anyone with the Burger King app went into these locations, they triggered a voucher to their phone for a 1-cent Whopper. Some people drove out of the car park and straight to Burger King, and others went to the counter and asked for a Whopper and were kindly directed to Burger King by the McDonald's staff. It was very cheeky, it was completely unexpected, and yes, it took them 2 years to build the tech, but the impact, as you can see, was phenomenal and award-winning. I think the figure there that impresses me the most is that they went literally within 48 hours from 686 in the App Store to #1, and it was a 37-to-1 return on investment, which was absolutely phenomenal for a campaign of this kind, which is why they won so many awards. Now, the point is that they used 9 different companies to do that in the 2 years that they spent recoding their app. Our tech, we built it at exactly the same time, and you know, it does exactly the same thing, but we've made it really easy for any app owner to achieve the same thing. Our tech plugs into any app, and we do more than just stuff that Burger King were doing. So it's an API to supercharge any app with exceptional notification tools that work completely outside of the app itself. So the app doesn't even need to be open for our technology to work. So these are location triggered engagement tools. There's no room for fraud. It's superb for retention of users. You get a measurable return on investment and immediate visible impact. Plus, there's the opportunity for new revenue streams across both marketing and brands and app developers. We know content is king, but we also know context is queen. And in reality, our API offers any app a lot more than they managed to run in the Burger King app. So we have all these different tools, visual, video, and audio content like podcasts. We can do surveys, footfall counts, deep links through for mobile commerce, augmented reality and live streaming triggered by location, which is on our roadmap to be delivered later on this year. But being able to do all this via an API and with one platform is really rare. We've only seen it in bits and pieces, sort of an element of it being offered by anyone competing to date. So it's either hard-coded into an app, or it's just the survey piece, or it's just notifications, or it's just the data analytics, or it's just sending things using a location. So most of the industry was born 10 years ago in the US, and they all came from the data analytics side of things. These businesses mainly target users with basic push notifications, and they use third-party data and attempts at personalization, which GDPR has pushed them, sort of on, and now they're diversifying away from mobile. They use adverts as a tool of choice, and they're trying to sell a product that goes across email, even TV. They're trying to do it in a programmatic way, which is very difficult. These are enterprise products. They rely on automation, which is vulnerable to fraud, and they're unsuitable for the mid-market brands that we're targeting, and none of them have a self-sign-up model. And it's also true that we're making Facebook, SurveyMonkey, and Pokemon Go a bit uncomfortable as well. It is a huge opportunity. To give you a benchmark, this is the current position, but by 2025, the global digital ad platform will be £427 billion worth that sort of money. That's 120 billion bigger than the global fintech market by the same year. So let me let that sink in. All the investors who focus on fintech, just bear in mind this is a bigger market than the fintech market. So as a team of career marketers, we've got a big vision, and it's based on our frustrations with the way the ad tech industry has evolved. I've had 2 successful businesses previously, a PR and marketing company and an innovation consultancy. Charlotte was a board-level agency product director working on brands from Mumsnet to Ford and Microsoft. And Mark is a seasoned software engineer and expertly manages our architecture and build. We're all full-time in the business, and we've got a team of 7 others. We currently use direct sales, and we're building early relationships with channel partners, and we want to flood the market to developers, to get app developers and app development agencies using our tech. The point is, our tech is relevant to pretty much any sector, and it's a product that's easily delivered remotely, and we don't have geographic boundaries. So this is what we've achieved in the last 9 months, but we are really strapped for resources to unlock the pipeline, and it is exceptionally frustrating. So you'll notice here that our main spend is on marketing and sales channel partnerships down here in the bottom corner. We've got, obviously hires that go with that. We've already started to line some of those up ready. We've got 100, it was 100, how much have I got on here? We've got 175 actually secured now, so I've secured a bit more. And we're treating this as a bridge round because we're already in active discussions with £411 billion Hamburg fund regarding a full seed raise by the summer, where we will be dramatically increasing the valuation of the business against certain milestones that we're already in discussion with them on. And we've got the investment committee in June. We're hoping to get a resolution on that by the end of the summer. We have also been approached by another seed round who specialise in ad tech as well. So now is definitely the time to come in with us if you're interested. Contact me, let's have a virtual coffee. I much prefer one-to-one chats. It's sort of what started the whole thing off for me in the first place, is have a direct relationship with me. As I said, we're looking for investors currently, but I'm sure that some of you probably have apps in your portfolios, or your startups who've got an app. You might be itching to discuss Bubble with us for those. So let me know if I can help. My contact details are all there. And thank you very much, Neil, for the opportunity to speak.
Joe, you're more than welcome. We've had a chat about various things. One of the things about the business club that we're looking at doing is obviously getting members in for a subscription agreement whereby we deploy funds each month into selected startups. And again, the key, I suppose, element there, let me share my screen for a second, would be the fact that most investors who come into startups don't know, have no idea when or where, at what point they can exit. Now, the Exponential Business Club offers, basically, as we say, bringing the buzz of the stock market to private equity's early stage growth and latter stage companies. In other words, the main problem that investors have is investing in these companies. They have no liquidity. They have no exit points till perhaps a buyout or an IPO or whatever it might be, a long time down the line. Now, the whole idea of the business club is that we offer a peer-to-peer sales shares as companies, as you just mentioned, raise additional funds and money at higher valuations. So as a founder, how have you found it with investors who've come in who want to exit?
We've had a couple of situations where that's happened. One in particular was with two investors who needed to release the cash for something entirely different. It was nothing to do with our business, and they were happy to sell the shares for just a small amount more than they paid for them, which sounds lovely, but actually it puts a huge pressure on us, because we were concerned about how that might affect the valuation of the business, which was much higher. We knew that they needed our help, and we didn't necessarily have the time to put into contacting all our shareholders or going out with them to try and sell the shares elsewhere. And it actually became really problematic, because we wanted to help them, because perfectly genuine reasons why they wanted to sell, but we didn't know how to really go about that to their benefit. I mean, they did sell their shares partly to people in the existing sort of shareholder portfolio, if you like, in the end. But I think if we could have had somewhere where they could have traded their shares with other people, where that was part of the routine activity, if you like, it would have been so much easier for us, because we just didn't really know how to help them. This wasn't a negative parting of ways or anything. We weren't sort of like, oh, well, you're going to have to deal with it yourself, which I know some people may have experienced in a startup environment, but it wasn't like that. We really genuinely wanted to help them, but it was just very difficult to do that.
Yeah, and I appreciate that. As I say, that is the main problem, is anybody invests in any private equity or early stage thing can't do it. The other thing we get feedback from founders and also investors is, I suppose, which we're now integrating, and I'll come on to this a bit more later into the business club, is interaction between investors and investors, investors and founders, and founders and founders. So founders can talk to founders and go, what problems have you encountered? Investors can comment on, well, we like that, but we didn't like that. So, as part of what we're trying to do, how important would that be to sort of like a company like you going forward?
Well, there's two separate elements there. I mean, the feedback, the most annoying thing as a founder going out to investors is, the feedback is actually really critical, because even if it's negative, even if it's you're really not looking, or your go-to-market isn't coming across, or something that is negative that you might be concerned the founder's not covered, I can almost guarantee they know it, they just haven't included it. And to get the feedback helps you to hone your deck, to get across the key things. That when you're a founder, there's so much information that you want to get across, and it's so difficult to get across in-depth, detailed information about a sector that an investor might know nothing about. I don't think investors realize how important the feedback is. And I think it's a shame, because actually you would find that the cream would rise to the top more, and you would build relationships that would then either turn into recommendations for other businesses to you as an angel, etc. So your quality of companies approaching you would probably increase if you were actually giving the feedback. And I know it's a time thing. I know investors get lots and lots of decks, but I think it's something that the industry really needs to think about. And one of the things that a club like this offers the opportunity to do is in that environment to be able to sort of to know who the stronger players are, because you wouldn't be in that environment as a business club if you weren't a startup that was serious about what they were actually doing and didn't have those opportunities. But the peer-to-peer piece with other founders, I mean, I know that John Spindler has sort of set up or been piloting some peer-to-peer groups, with a view to, sort of encouraging the business community in the city in particular, but across the UK, to actually look at this, because we need, I as a founder, it's very lonely. It's very hard to find other people to talk to. And even though I've got a superb management team who are essentially, I mean, they're like co-founders for me, but it's when you're in that position, sometimes the experiences that you've gone through yourself are totally different to another founder. And when you share the experience, you come up with solutions and ideas for tackling challenges around investment, but around running your business that you just wouldn't have thought of otherwise. And to have a space where you can do that confidentially, Chatham House rules type scenario, which is how you've always presented the business club when we've met in the physical space, to be able to do that and have those conversations with other founders, I think really strengthens the founder community by doing that. I don't know.
Yeah.
I mean, are there any other founders on here that have an opinion about that?
Well, Joe, I'd first like to say that, and thanks for your input. I've found with the physical events we held in the past, and with founders, and through the workshops and everything else, founders have sort of come to us and go, "Oh, I've got an investor who'd be interested in investing in this." Now, they're not worried about the fact their investor's not going to invest in them. They're liking to introduce their their investors to other founders.
Yeah.
It's not like I'm only going to invest in Joe, or I'm one of Joe's founders, therefore Joe's not going to introduce me as a founder to any other company, because in case I pull my investment or whatever the case is. Yeah. And we found that as one of the hearts of the founder to founder environments that we want to grow through the business club.
I agree.
You might be in ad tech, you might not be in fintech or health tech, or whatever, or health, or whatever the case is. It doesn't mean to say that your group of founders don't want to invest or be introduced to other opportunities.
Yes, with our shareholders.
Yeah.
I mean, I've got a shareholder who is very much into Bitcoin type, sort of investment, in that the actual sort of blockchain piece behind it and how that can be applied to other technologies. He's come from a financial insurance background, and I know that there are other people that I've introduced him to where he's made an investment. There are actually investors who I've known have a very strong liking for green investments and really environmentally considerate investments who've not looked at us, but because I've got to know them during the journey that I've been on as a founder, I've introduced one person to another company and they invested in them. They didn't invest in us, they invested in the other company. Yeah. And but that actually is how founders tend to network, because we have to try and find, and particularly since we've been digital, it's virtually impossible to actually really genuinely connect with investors. And it is about getting on with them as well. And it's really hard. Where do you find them? You can look at the, UK Business Angels list. You can look at the list. You can't tell what these people are like, personality-wise, in the way you can at a networking event. It's really hard. So we're becoming more reliant on each other to say, oh, I've got an investor who might be interested in what you're doing. Or I went to an event and there was an investor there who's interested in medical stuff. Oh, Rosie, your .com's company, I've found an investor that you should approach because I know they're a doctor. And that happens so much. I don't think that investors realize how much founders talk about them, to be honest.
Yeah, Joe, I think, that's probably one of the main reasons behind the whole idea of the Exponential Business Club. It is taking investors, it's taking startups, early stage scale up companies, put them into an environment where we can network together, rather than necessarily just physical, but virtual, but also global nowadays, because the whole world's changed with, meetings. We can hold an event now at 12 o'clock in the afternoon and have Asian investors, Asian people and such like as members of the club. Doesn't necessarily just have to be a UK company with SEIS or EIS advantages.
Craig.
Yeah. And that's so much important. And what we want to do is, link investors to investors, investors to founders, founders to founders.
Yeah.
Going forward. And
the
whole idea of the club initially is that we take a membership. And I'm trying to flick this one through. It's going slowly at the moment. But the club is set up as a membership club with different options whereby you can pay X amount per month, of which the majority of it will go into gifted shares in companies that we've looked at, we've vetted, whether they're startups or early stage, and the members of the club will get gifted shares in those companies each month. They'll go onto a platform. They can sell those shares as, like a bubble grows and you raise more money to their peer-to-peer members. They can interact and again have regular updates from the companies that the club, i.e. the business club, is investing in on their behalf. Added to that, what we're also doing is relaunching our regulated investment platform. So, for example, if we've invested X amount of money in Bubble, which we haven't, I hasten to add at the moment, because we're only just launching this, the club, but investors then, club members then see it, they can then go on to our regulated investment platform and commit direct investments under a regulated investment platform, providing their sophisticated, high net worth, self-certified investors. So it completely fills what we'd call the circle. So the startups early stage get investment from us. If a member of our club likes you or a other company, they can then go on to the actual platform and go, okay, there's 100,000 or there's 50,000 or there's 20,000 to your investment. So what we're doing is we're taking a complete circle, as I say, of investment from startups and such like, with memberships which get gifted equity plus lots of other benefits, which we'll explain a little bit more later, to then, for want of a better word, an enclosed crowdfunding platform where they can invest direct into the companies they're looking at.
So in a way, you're giving the founders the opportunity to become investors as well in other businesses.
Correct. Yeah.
Yeah. Membership as well as investors being able to sort of increase their portfolio. And myself as a founder would have one point of contact rather than 50 or 100 new shareholders. I would have one point of contact, which is the club, who are putting sort of a percentage of the money that you're making from the membership fees would come towards the various businesses that you have as part of the club, who you've vetted and decided are sort of part of the share portfolio, if you like. Is that right?
Absolutely correct. And also, depending on the stage they're at, we can offer them mentoring services, pitch decks, help, pitching events and such like. And obviously we as a club, as an investor behind them, will offer as much as we can in their help going forward. Yeah.
So your quality of startups is going to be good coming in, because they're going to want to be selected and they're going to want to benefit from the things that you offer, the services that you offer, because they want to be selected to be part of the shareholding portfolio that you've got, and they want to be on the investment platform. Is that right as well?
Yeah, well, yes, ultimately. I suppose the initial one is we find startups through our workshops and such like, and introductions from other founders you've just mentioned. We can then sort of obviously offer them investment. We can wrap them in cotton wool. We can, put an arm around their shoulder and bring them forward. And then again, if they need to raise more money later on, we could put them into the crowdfunding opportunities and such like. But we're here basically to, I suppose, vet from the club point of view companies that we see with great potential, like yourselves, obviously sort of slightly latter stage in an initial startup, but that quality of company that our investors or our members can come into, we can invest in, and we can take you or come on with you on the journey going forward.
Yeah.
Just to add to that,
Yeah,
Neil,
Craig, please. Yeah.
I know that Joe touched on it earlier. An important part of the club moving forward is the social interaction between the investors and potential investors and the companies. So obviously this COVID time's been difficult for everyone, and when the world starts to normalise again, our physical events in the city will start to take place again. But a lot of recurring investment comes from existing shareholders, and having club members as shareholders. Neil touched on it there. It really gives you the chance to get to know those who are investors, even though it comes under the nominee structure from the club. But to get to know those guys face to face, and a big thing for any investor is to have that relationship with the people running the company. Not that someone that owns £10 in your company needs to be chapping your door every 5 minutes, obviously, but if you give those people that setting to show that we're all humans at the end of the day, and it's not just about the money sometimes. It's about the journey as well, and I think as a club and as a sort of ethos to have these functions in a social setting with no company promotion, as well as companies promoting for capital at different points. It's a real plus for companies looking to get onto the platform or to raise capital, and for founders and members of the club alike, because they've all got a common interest in business. At the end of the day, everybody wants to make money, but for some people it's not just about the money, it's about being part of something and going along on the journey.
And it's just as important for the founders as well, because we want to. I've got a group of shareholders, and we want to know who they are. We want to get on with them. We want to, sort of help them feel as if they're, although they don't need to be part of the business per se, they are. They're there, and if they've got expertise, it's lovely to be able to contact them and say, look, I could really do with some advice on this next round. It's going to be a leap from startup to scale up. What would your advice be? And often they are able to give really, really good advice. But also, we're looking to strengthen our board at the moment, for example. So, sometimes a lot of these investors are also non-exec directors, and, or they're also consultants that specialize in a specific thing. And, we've forged some great relationships with people, who would have liked to have potentially invested, but maybe aren't in a position to do so at this moment. But, one we've got is going to become a non-exec director because their area of expertise is so aligned with what we're trying to achieve as a business, and they understand the ad tech space really well. So they're a natural fit for us. So, these relationships, even if they're all digital, which all of ours have been over the last 12 months. Some of the people that I've been talking to who are planning on investing, I've never met before. It's all been digital. But face-to-face digital, you can actually really get to know someone's personality. And I think they need to trust me, and I need to be able to trust them that they're good for their word in what they're going to bring to the business. They're not going to let me down last minute and not come through, or it's a challenge. And this sort of club will make it much easier to really connect to people properly.
And as the club grows, what it also provides is lots of additional voices for your story, right? It's that dropping the stone in the pond and watching the ripples go. When the club grows to
Yeah.
they have that conversation and you don't know where that leads to, and that's a real important bit. Is, you know, you get brand ambassadors as well as shareholders. So
Yeah.
that's a
Because
sort of
even if
key
you're not
point.
raising, you're still planning your next raise. You know.
You're always raising. You're always
Yeah.
raising, Joe. You should know that by now. You should know that by now. You're always raising.
I think what we want to become is a two-sided coin, really. I suppose one is members who pay and get gifted shares, members who don't get gifted shares but have other benefits from networking and our networks and such like going forward, and the companies from benefiting again from introductions, like I suppose like a very much directed LinkedIn, rather than looking at, you know, I've got 12,000 people on my LinkedIn. I can send out various emails and bits and pieces to people, but to actually make it a dedicated, directed, missile guided introduction. So, you know, like, you know, you, Joe, can go, I'm looking for a new, and it can even run to recruitment. I'm looking for a new so-and-so in this field. Who do you know? Or, you know, post a thing on it. We can direct information, people to you to help you. Yeah. As well as then, you know, you might say to me, oh, I'm going from scale up to the next stage, or I'm going from startup to scale up. My business plan's out of date. Who do you know who can do this? Well, bang, there we go. We can put you into this guy and this part of this environment. Yes, there's other choices, of course there are, but with startups and in particular, we found over the last 4 years is, you know, I'm afraid most of them don't have a clue what they're doing when it comes to, you know, business plans, pitching, and such like, and we can help them. Yeah. And I suppose what we want to do is develop that environment whereby people can invest on a regular basis, forget about it, you know, £400 or £500 a month, get gifted shares, get benefits and such like. They can also decide not to take the shares, but benefit from, I don't know, networking lunches and such like. Founders can come into the other side of the business whereby, again, we can do investment forums, founder meets founder, investor meets founder scenarios, and everybody helps everybody in a directed approach.
Yeah. We've got a question from Ian Champness there, Neil.
Okay, Craig, sorry.
Do you want me to read it?
Yeah, please.
If the club invests X%, who and how is the investment valued at the time of investment? And how are the gifted shares allocated to each club member dependent on their membership category, silver, gold, and platinum? And will they be able to sell them without restriction?
Yeah, great question.
How are you going to do the valuations?
Right.
Yes.
The valuation. So a startup comes to us and say, we're looking at raising X, Y, Z for whatever percentage in. Yeah. Standard pitch. So the club will come in and go, okay, fine. We either agree with your valuation or we think it's over or less. Therefore, we will invest, if we like you, depending on how much you need, over 3 months maybe. So 1 month X, 2 months X, 3 months Y. That then gives the club the shareholding. The members side of it then depends on how much money they've got in the account each month. So if we've got 100 members, let's keep it simple, with £1 and we've got £1 share, then they'll all get £1 of equity or share in that particular investment.
But it'll be based on a ratio depending on whether they've got silver, gold, and platinum.
Yeah,
right?
yeah. So obviously, the more they invest, the more shares they will have.
Yeah.
Yeah. Then those are held in a nominee account under our, not Exponential Business Club, but a separate nominee shareholding company. And through the Exponential Club platform, you'll be able to log on and go, okay, so I had £100 last month and I got 1 share or 100 shares in ABC. Yeah. Now, the whole idea of startups, scale-ups and everything else is they're always on a capital raise. So they will then perhaps be looking, as and Joe would mention earlier, finishing off this round with a view of taking 3.5 million off a fund in 6 months' time or 4 months' time, whereby her valuation will go up. That then offers the club member the opportunity to go, okay, I bought this share at £1. It's now worth, in theory, on this next round of valuations, £2 or £5, whatever it might be. I can put those shares up on the market within the club to other investors to buy. So it gives them an exit strategy.
Yeah, so they can sell them without restriction in that secondary market.
Correct.
But it also doesn't affect the valuation for the founder like me, because it's on the secondary market and it's not actually visible, I suppose, outside.
Yeah, it's not visible. Secondly, you're obviously as a secondary sale, you're not getting the cash.
Yeah.
As the founder.
Yeah.
Founders could have, and I don't want to get too complicated in this today, but you know, if you're raising today at £1 and you're raising in 6 months' time at £2 and we've doubled your money, as a founder, you can have a clause in there saying that you can't be undersold.
Yeah.
Right. So in theory.
So it doesn't risk affecting the founders'
It
valuation.
doesn't necessarily risk affecting the founders or the investors, because they can they're now up at, you know, £2 a share instead of £1. Right.
Yeah. Sounds good.
It's not designed generally, although it is there for the individual members to unload their shares going forward. It's an ability, but the club reserves a right to completely unload its holdings underneath the nominee account anyway. Yeah. So for example, if we've invested 100 grand in the company, 6 months down the line it's raising at XYZ, and we can unload 200,000 profit, we will do that, return it to the club members.
Yeah, and
it'll sit in their account as cash. Then
if we were moving to a situation where we had a fund, you know, so coming in, generally they want to tidy up the cap table, so that's not generally an issue, I don't believe. You know, if somebody, you know, if that was to happen, I think generally as you move through from, you know, the seed stages and Series A stages, I think there is a desire for whatever fund that's involved in the investment that they do want to tidy up the cap table where they can.
Yeah, but the whole holding would be underneath the Exponential Business Club as the investor.
Yeah.
And the nominee of that, and then the shareholders pro-rata to their investment holding each month. Because it won't just be in your company, it'll be in a number of companies. Yeah.
Yeah. And that makes
one company might move forward quicker than another one.
But that also makes it easier on the reporting side for us as founders, because we're only having to report with one line on the cap table and report to you, and then you disseminate that report within the club, don't you?
Correct. Yeah. The software and the platform does that.
Yeah. You need to answer his question, Neil.
Sorry.
There's no restrictions. There's no restrictions on selling your shares in the secondary market when they're allocated. So and the valuations by the club are done by obviously the group that are there, the peers of the club, from myself, Neil, and some other investment people that overlook the valuations. Valuations in unlisted companies are subjective. However, what we can't do as a club, or what would be difficult to do, is for companies who are halfway through the round, for us to come in and start negotiating different prices from there.
Yeah,
so it's hard, right? It's hard. It's not to say it couldn't be done, but it makes the shareholders it makes the other shareholders nervous, and it makes the founder's job harder. What we can do as the club moving forward, and Neil touched on it slightly, is that we can commit to the full funding requirements that a company has, and do it over a period of time, because invariably the founders don't, or the companies don't need all the capital up front. So we would say, okay, there's £150,000 required. We will do it on a convertible note basis, convertible basis based into 3 months, or over 3 months or 4 months. We'll commit to that capital, and you'll get it in a drawdown schedule. We'll get those shares. We'll get it at the price that we negotiate at the time, which won't be invariably the price that they want off the top. I'm sure we'll go from there, and we will make sure we get a discount in most cases, and that's what the strength of the club brings. Obviously, all the club members that goes with it, the brand ambassadors, and the ability to take those funding rounds out in their entirety. And if we don't do that on our own, then we'll syndicate some of the finance from our existing network to come in alongside the club, so that the club doesn't have to do all the heavy lifting and all the funding rounds. So that's kind of where the advantages sit from there. Okay, next question. How do you decide which members get the SEIS shares, given you'll no doubt be investing in some with SEIS, some with EISS?
Let me have a quick look. I'll try and...
When we've done rounds like this before, we've spread that. When we had SEIS, and we had a round that was part SEIS, part EIS. And what we did was we actually divided up the SEIS equally between the investors coming in, and topped it up with the EIS, so that they had a right to claim some of the SEIS and some of the EIS, because it's down to the individual investor's tax status as to whether they can claim it or not. If the company is eligible for it, that's great, but it's down to the individual investor's tax status. So if you are eligible to claim the tax relief, then it would be the people who are eligible for the tax relief that would then get the relief divided between them, I'm guessing. Is that right?
That's correct. But let me get back on that one. Endo, hi, mate. As far as the club goes, as I say, it's run as a club. In theory, then it's more like an institutional investor. Institutional investors aren't eligible for SEIS, EIS. It's only individuals. So if the club comes in at XYZ, and you've still got 8% of EIS or whatever available, it doesn't affect that at all. Yeah, it's the club isn't individuals investing. The club is members taking a membership share in the club, which then invests in early stage SEIS, EIS companies, but it doesn't take up their allowance.
Okay, so it's only the additional investors that might come through the platform that would follow the normal.
Yeah, if we had Joe on the platform and we'd invested the next 200 grand, and she was after another, so taking out the SEIS, and you went on the platform and she was raising on our regulated platform as an individual, then yes, you would be able to get whatever percentage of EIS extra on top of that. But bear in mind here, the club isn't, although we're talking UK mainly at the moment, the club's designed to be global. So we will have startups in Dubai, Malaysia, Europe, Thailand, wherever it might be, yeah, where these things, nobody's even heard of these SEIS or EIS tax advantages. Yeah, it might be that we've got a silver member paying us £400 a month, or X amount of silver member paying us £400 a month. We might 1 month invest in a UK company startup. The next month we might still invest some more money in that startup, but we might then invest some money in, I don't know, let's just say a Malaysian company. yeah, which is completely irrelevant to the UK concept of SEISE and EIS. Yeah. So I hope that helps. I know we're talking lots of different things here. We're talking members investing, members not investing, we're getting benefits. We're talking companies getting cash flow or investment from the club. So, but Ando, good question. Hope that answers it. Does anybody else have any more questions? We haven't really explained too much about what we're doing. But as I say, very simply, we've got a number of stages on the membership of the Exponential Investment Club, whereby members pay gifted nothing. They don't get any shares. They can become a basic member, access our events and such like with discounts. Silver membership, gold membership, platinum membership, varying levels of monthly payments where they get gifted shares. We're also running a non-gifted share concept whereby that will include much the same levels but without the actual gifted shares. So therefore, attend events, get invited to VIP events, concierge services, networking and such like, partner benefits, member rewards and such like. And then we've got the company side of things whereby obviously companies can come in. We won't necessarily invest in them, but they can, I wouldn't say promote, but they can put their company details on the site to members. It can't include, because this particular side of the business, i.e. the Exponential Club, is a non-regulated side, so you can't put on an investment opportunity, but it enables then the companies who are raising to go over to the other side of the business, which is the Exponential Investment Platform, which is a regulated platform, like a crowdfunding platform. Yeah. So I hope that sort of clarifies things a bit.
We've got another question there from Ian.
Okay, let me have a quick look. Hi, Ian. The initial concept of the club is to keep it separate to Craig's private equity fund, because Craig does run a private equity fund as well. So in theory, yes, it will be subject to how many members we've got paying to how much money we can deploy into each startup each month. Obviously, simply there, if we've got 500 members paying us £400 a month, that gives us deployable capital less fees and stuff, something in the region of £180,000 a month that we can deploy into startups. I hope that answers that. Due diligence, we're running it through ourselves as investors. Craig's got a capital, as I say, a markets company in Mauritius. Plus, we've also got two companies in the UK who are SFC, or whatever they're called these days. The other one, SFC, regulated capital advisors. So we'll run the whole lot through a complete due diligence process. From basically, with startups and such like, it's slightly different. It runs more.
Is he referring to due diligence of the investments or due diligence of the club? I think you're going off on the angle.
I think the investments, because yeah. So we'll get.
You'll give us a long list.
To answer your question, we're going to have a company that comes to us and say we're worth 5 million, and we go, no, you're not. You're worth 2, right? Then we'll have our analysts look at it and everything else, the potentials and bits and pieces, and maybe go, okay, yeah, maybe you're worth 2.5. We'll offer you the money on the basis of 2.5, not 5.
But it's not so much about valuation, is it, in the due diligence?
No. I mean, valuation doesn't, the DD and everything else is, it really, especially on initial startups, is completely irrelevant, because, you know, as you've come to our events, and so Zando and everything else, you look at, you know, evaluation, and you go TechCrunch in the US, you take a few noughts off it, you're probably about right. But it will be, we will be treating it as our investment, which includes, do we like the founder, do we like the concept, do the financials match up, you know, plans, business plans, pitch decks, everything else. Yeah, it's not something we're going to be investing in 10 startups a month. We're going to be choosing maybe one a month, maybe two. So it's not a crowdfunding like Cedars, where everybody puts their £10 into a company that nobody knows anything about, but they think, oh, it's great. Craig.
Yeah, so I was just saying, it's not just startups either. That's the other thing to know. It's companies that need growth capital, basically.
Talk for 1 minute. I need a comfort break.
How you want to box off or put that growth capital into. We can do it. We can do both. We can do convertible notes and straight equity. And we're not restricted. We're not restricted in that sense. And it obviously, from it comes from an investment point of view, it goes hand in hand with, you know, follow-up investment as well, because we understand that capital being deployed into companies just once sometimes isn't enough. So it's about the founders themselves, or the principles of the company. I'm going to stop saying founders, because some companies are older and more advanced than others. So it's about the principles that are involved in running it, and what's really required to get them to the next step. And what's
just come back to Ando's point of view. And I don't really want to use this word, but like making investing in startups fun, because again, the members aren't determining the investments. As I say, they're done through proper DD sides and such like. But what we will have is pitch events, as we have done before. We will have, for want of a better word, a league table, whereby our members who are watching pitches, maybe even watching early startup practice pitches and such like, can vote on their favourite run. Now, that won't necessarily dictate that we're going to invest in those, but it will give us an indication of investor confidence in a particular company. So if we have 100 people at an event, and we have 10 people pitching, and one particular company gets 70% of the votes, we'll be thinking, oh, okay, let's look at that, because it looks quite interesting. And why have the people like that? We can then drill down and go, okay, let's look at the financials, let's look at this, let's look at that, and everything else. We are by no means saying we're taking the members' opinion for an investment, because we can't do that in a non-regulated club, right? But it will give us an exciting league table going forward. Yeah. And then if you as an individual would like to go over to the regulated side and invest in it, then that's fine. That's completely out of our hands. Yeah.
You've got a question there from Georgina.
Hang on.
How many members have you got now?
No, we've literally just, Georgina, we've just literally launched this. We've got probably expression of interest, something in the region of 350. And this is part of tonight's event. because we've had our old investment platform, we've got our investment group, plus our database, which we haven't hit on this one yet.
She's also asking, which month are you hoping to invest in the first founders?
Realistically, it's going to be in about, where are we now? May, coming in June, July, probably mid to end of July.
And who decides which founders get invested in?
Again, that's down to the group.
So you'll have the investor committee.
Investment panel, DD panel, and everything else. Yeah. You know, it's not a throw of a coin. It's done again through, I suppose, companies that have been, and Georgina, Joe, we were talking about this yesterday and earlier today. Companies that have been recommended to us, companies that have come through our pitch events and such like that have had traction, like, for example, yourselves, and I'll go back to a few others, Georgina even, because she's been through our practice pitch, and I hope she doesn't mind me saying this, you know, initially it's, you know, like rabbit in the headlights, and now she's probably one of the most professional pitchers out there. Yeah. And that's not with them mentioning any second names there, so it doesn't. So it's a purely professional, it's purely professional based panel.
Nishit's asking what would be the average ticket size. I think you were sort of intimating it was around about possibly about 100 grand, 80 to 100 grand would probably be the average.
Yeah, we'd probably be looking at staggered over 3 months, probably max 50 a month, so 150. Yeah. That can change as well, because of course if we come in, and this is the other thing to bear in mind, and even our own investment platform, but if we've got a particularly perhaps a startup and we come in and fund them to 40, 50, 60%, we can introduce them to various crowdfunding options, which we have done with a number of companies recently who've overfunded 150% on Seeders, for example, or Angel's Den. But they can't go to these companies without some form of corporate or initial investor.
So are you proposing that you guys would be able to take lead investor status?
Yes, in theory, by default, we would. Yeah. Which then enables us, if not through our own investment platform, to push it out to like a wider crowdfunding thing, i.e., for example, Seeders or Crowdcube. Or
I suppose as a founder, we've got it with this club, we've got the two sides of it. We've got the investment that the club's potentially making through the membership fees if you're selected for that, but then you've also got the opportunity to be on the funding platform, which is where I've been before with you, where you get the interest of investors like the other funding platforms that are out there, but there's the added bonus of it being part of this club. So
yeah, of course there is. I mean, it's like, somebody can come to us at the moment and pitch 100 quid and we go, yeah, like it or don't, but there's got to be an incentive for us then either to get involved in them, to help them, or to do something. And this is what the business club does, whether it's we invest in them direct or we help them anyway, because we might be able to go, okay, Joe meets so-and-so, so-and-so invest, you go, okay, thanks very much, that was great. You go, okay, Ryan, look after us and everything else, right? And it just builds our whole community of what we're looking to do.
I mean, Ando's asking whether, I'm guessing, Ando, you mean would the club take a board seat? Would they be asking for a board seat on the companies or businesses that they've invested in? But I'm guessing that you probably wouldn't, because you don't have the resources to be on all those businesses on their board.
I'll let Craig answer that one. My initial one would be not necessarily, but Craig, could you just enlarge on that one?
Yeah, I would. It depends from company to company, from investment to investment. I think some opportunities that we would invest in, that a board seat might be advisable to take, just because we can help the club and secure help the company, sorry, and safeguard the investment. But it's not necessary for every investment. So that doesn't really answer your question. In certain instances, yes. In others, I think we would be willing to let it go, especially if it was a deal breaker. It depends on the size of how much funding you're going to need moving forward. Because if we're not the major source of finance moving forward, you're going to need additional people to go through your board, and it wouldn't be the be all and end all for us.
I suppose this also circles back, Craig, to the thing that we were talking about before, which is that this is an environment where you're going to have a lot of investors who possibly also take non-exec director roles, whether they actually are investing directly in a business or not, as part of the relationship building. So I suppose it may be that within the club, you will have a group of people that are trusted Neds that you might actually business anyway, I'm guessing.
There is that.
I think we'd only, Joe, I think we'd only deploy them, I suppose, as Craig says, depending on the level of investment and also the level of expertise. There's no point having me on your board.
Yeah.
Because I don't know.
You don't know anything.
I don't know. I've got no idea what you're doing. No.
No matter how many times
you want to put me on a sales board or a sales director board of something, then yeah, fine, take it all day long and I can sort that out, right? But again, with the club, it enables us to say, okay, fine, we've taken a thing. Do you necessarily want a NED or an advisor? Yeah, I do in that particular field. Okay, in which case, let us find one and recommend them to you.
I think we might appoint someone that wouldn't necessarily have to come from the club, but maybe from our circle.
Correct, yeah.
Awesome.
Yeah. I suppose what we're getting at, and a lot of the questions seem to be running towards more like the quote VC company concept, where they're basically going to take control of your company.
Hi, Neil, I had a question.
Yeah, sure.
Right. So from what I'm gathering so far, the platform's going to have 3 different sides to it. So one is actually investment platform. One is for the founders like me who's requesting the fund. And then you have another one, which is just for the investors to buy in nominal shares, which they wouldn't even know what company they're actually investing in, but it'll be hoarded shares within different startups.
Yeah, they'll have an idea. Well, they will know what the shares are because we'll hold it's like we're doing with pitching. We'll hold the events each month to say, look, we've just invested in Joe's company, or we've invested in your company, or whatever it might be. Then you will have a monthly update seminar to members to say, we've just signed this, we've just done that, and everybody goes, great. Yeah.
So is it a bit like Shadow Founder? Because that's the platform that I'm on at the moment, just sort of confirming those last final bits before we actually go on the private fundraise.
No, this is like for one of a better, I don't call it investment club. It's not. It's a members club, which has got an investment element to it, plus many other benefits, i.e. networking, you name it. Yeah. It's our responsibility to get members paying us. We then deploy funds in companies that we think, again, through investment panels and such like, from startups through initially startups, early stage scale ups.
Okay.
Yeah. We're not looking at doing, as I say, 10 companies a month. We might choose 1, we might choose 2. It's not, how to put this bluntly, we're not a shotgun approach on startups, because we know that 9 out of 10 of them are going to fail, right? So we are trying with our panels and such like to limit any potential failure for our club members going forward.
Right.
Yeah.
Sounds like, yeah, it's really good. I mean, that kind of network to actually meet the founders as well as investors, what's actually needed. Because the way I look at it is about what's your need. You know, for anyone, there's a need. Even my child is 13 years old. He's got a need. You know, it's like, what is the need? And at what stage you're on now, today, not tomorrow, not yesterday. So it's almost from that side. So the need that we have at the moment as a founder is obviously to get the cash in the bank and to get the business going to the next milestone. And then we move on, so on from there. So
Adam, exactly. I mean, the whole thing, and again, talking to Joe and so many other founders, is it's okay. The main thing is getting funded, but then it's like advice going forward. What do I do with it? How do I do this? What do I do? And we just want to put the community together that's going to help everybody going forward.
Are you still at the events in Liverpool Street or Bank or?
Yeah, I remember you got us a few years ago, isn't it?
That was, well, that was all before pre-COVID, so yeah.
Are you still going to do the physical events?
We will. I think we're going to do more
Virtual.
physical networking events rather than startups.
Okay.
Yeah.
Yeah.
Or latter stage companies again, or not so much latter stage, but you know, slightly more advanced, because the one thing that's come out of this for us on events is that we can encapture the world at different times through virtual events. You know, we can hold a pitch event at 12 o'clock London time, which incorporates 6 o'clock in Asia, 4 o'clock in the afternoon, or whatever it might be, depending on the timescales in the Middle East and such like. And we can pull all these people in because we've got our networks around the world. As I say, obviously, Craig's sitting in Dubai at the moment, whatever time at night it is now. He's been there 19 years, right? We got a huge following in London. I've got a massive database and contacts in Asia because that's where I spent most of my life. So I think hybrid is the way going forward. Yeah.
It sounds like a plan, but I think open free networking does allow people to actually see what their needs are in a more sort of free stance rather than more allotted. So I'm in health tech. Who else is in health tech? Who knows about health tech? Who's got interest even in health tech? So that's like the first thing that comes into play. And if you don't have interest in health tech, then obviously you might not be a potential partner or investor or anything in that sort of sense. So maybe that kind of market segmentation helps as well within the kind of areas. Fintech, ad tech, insurance tech, and
exactly. It's Adam. It's exactly what Joe was saying earlier. It's like, you know, she might have an investor who's not into ad tech, but might be in health tech. And if you two are talking, you know, through our club concept, you might go, actually, I've got an investor for you. You've got somebody I can introduce you to, and everything else. And I suppose what I'm trying to achieve is as I say, is a rocket launched, directed Scud missile of LinkedIn, rather than, oh, let's just accept everybody on my LinkedIn and to do this and do that and never get anywhere, but go, right, Joe, meet Adam, right, what's the scenario? Right, talk.
Yeah. It's all focused around the world of investment and founders, and that's what's missing, is that community that brings the two together really well.
And it's the founders telling the founders, oh, I spoke to so-and-so's VC, and, you know, don't bother with VCs, find some angels, do this, do that. Because, you know, I tell my startups when they come to our workshops and such like, don't, and Anthony Rose will tell you the same from Seed Legals, forget them. The chance of you getting a VC investment in an early stage startup is 0. Yeah. And people go, yeah, but I'm going to spend X amount of time contacting these people. Craig will explain this one to you, please.
Yeah, look, yes, you know, they receive, I don't know, 1,000 pitch decks a week, whatever it may be. The chances of you and your first endeavour into the business world, getting that check from those guys straight off the bat is it's just not going to happen. They want you to have felt a bit of pain beforehand, get friends and family around, got some more money, tried to get some next money, and then unless you are the one, right? That's there's always that chance. But I don't want to put everybody's fire out, but there is always that chance. But
we're not trying to be negative. Joe will tell you that, won't it, Joe?
It's founder to founder that you find out that sort of information, though. It's founder to founder where you understand, you know, who you should be going to at which stage, and you know, it's those conversations that really help to signpost from other people.
I think what happens as well, Joe, is that the people, the funds are easy to find, right? They're easier to find, you know, that you can find those company names, and then you find someone at that fund, and then you speak to them, and that person was, when you spoke to them, was a bit nice, really, and should have just told you you've got no chance to start with, but they humour you, or that's what the funds do, right? They speak to you, and then they think, oh, that's a good idea, and you think you're getting somewhere. And actually what's happened is they've got another portfolio company in a similar space, and they've dragged you along for 6 meetings, and they've drained all the information out of you because they're going to invest in someone else that's at a stage that's a bit more applicable to where their comfort zone is. And then all of a sudden you've gave them all the information, you gave them the key things about the competitors, you've picked your brains, they've picked your brains, and off they go. They give the money to someone else. And it's those things that people don't quite know. Being brutally honest about all of this in early stage companies as well, it's the hard thing for us as a company, because, you know, we do, I say, we've been raising capital for a long time, and it's finding a way to make it, you know, we want to help people, but it's finding a way to make it work for us, make it work for early stage companies, and giving it a structure that's palatable for everyone. So that there is a social element to it, so that there is a business element and a sort of mentorship that goes along with it, and that's, I think, what we've managed to do now. You know, as early stage guys, that, you know, people have come along to our events and raised money from people that we know that they've been introduced to, and that they've not, you know, we've had agreements with, and they've not done the right thing, you know, and we don't want it to turn into that sort of messy situations with early stage companies, and we're trying to avoid that and make it friendly capital. Friendly capital is what we're trying to come across with.
Well, it's community capital, isn't it, really, in a way?
Look, that's it, you know, and you sometimes, not all capital is equal, you know. I'll tell you, just in the last few weeks, I knocked out 3 different term sheets for people, $30 million, thinking you've had a great month. None of them took it from different ones, and it's where groups align, right? Not all capital is equal.
Yeah.
And that's, you know, that's the next part of the journey for people in the early stage game. They soon find that out. So yeah, that's what we're trying to achieve, is being that sounding board that's got the pockets to go along with it.
Okay, great. We got any more questions before we close, because we've run over anyway? But Joe, thanks very much for today.
You're welcome. Thank you.
I'll knock the video out and send you the link. Adam, thanks
Thank you,
care.
Neil, for having me on the show. Let's see how we progress, because I'm literally at a stage where we're still not even SCIS, EIS raised yet. So I need the first capital to land, then my head will be a bit more organized in terms of how we do stuff. I mean, I'm part of level 39 as well. So if you want to do any kind of events there or do any partnership with Amy there, I'm sure you know her.
Yeah, we've got a few there. We've got a workshop, free workshop coming up early next month. I'll send you the link. That's with State Legals as well, so that's useful.
Fantastic, yeah. I mean, I was with Anthony as well. There was another event. It's called Pop Up. I've forgotten how the last bit. It's Pop Up events. Yeah, so many going around. So I've just got the email now from them. So that there's a lot of different kinds of small pockets of links which possibly you could link with for those kind of.
Well, we're looking at doing that. Funny thing, Adam, is that most of the companies are doing like online pitch things nowadays with some of our partners. Never used to do it, and they used to come to our events, and obviously they've worked out that doing some sort of virtuals okay, but they're not really in the field that we're in.
Right. Well, everyone's different, I suppose. But maybe for those that are in, because when everything opens up again in about 2 months, 3 months time, and the sun's out, I don't think anyone would want to stay on digital and say hi, hello over there. So, get in a car, get on a train, go and see someone and say hi, hello. This is what I do. How can you help me? How can I help you? So it's a bit more interactive than
precisely. That's what we've always done, and that's why we've got our following. Yeah. Anyway, look, have a great night, Joe. Thanks very much, Craig.
Thank you.
Thanks, Craig.
Everybody else.
Welcome. Thanks, everybody.
We'll send a presentation out to everybody, and again, thanks very much for coming, Ian, and everybody else. Wendy,
thank you,
Christian. Thank you, Nitesh. You take care. Cheers.
Great.
Everybody else, thanks very much indeed.
Thank you.
All the best, everybody.